All right, let's get right into it. Today, we're digging into Coinbase's Q3 2025 earnings report, and honestly, it's a fascinating one. At first glance, the numbers seem to tell two completely opposite stories.
Okay, so this is the central puzzle we need to solve. How can a company report a record-breaking profit, over $400 million, while at the same time it looks like they burned through nearly $800 million in cash? It seems to make no sense. It's like a story of financial ice and fire.
And here are those numbers, side by side. You've got a GAAP net profit of plus $433 million, right next to a free cash flow of minus $785 million. So what gives? How can both of these be true? And more importantly, which one is telling us the real story about the health of the business?
To figure this out, we have to look past these big, flashy headline numbers. We need to filter out all the accounting noise to find the true underlying signal of the company's profitability.
You see, that big profit number is heavily polluted by things that have nothing to do with Coinbase's day-to-day operations. They had a huge unrealized gain on their crypto investments, but also a giant unrealized loss on their Circle investment. These are what we call paper gains and losses, no actual cash moved. And since they nearly cancel each other out, they just muddy the waters and hide what's really going on.
So then what about that massive cash outflow? Was the business just bleeding money? Well, no, not at all. This was actually a deliberate strategic move. They made a $2.1 billion investment to buy USDC. Think of it like a grocery store stocking its shelves. They weren't burning cash to cover losses. They were investing in inventory to support their customers and fuel future growth. Now, this is where it gets really interesting. Look what happens when we strip out all that noise. We take the official GAAP profit, we add back non-cash expenses like stock-based comp, and then we subtract out those wild investment swings. When we do that, we get to a much cleaner, much more reliable number, adjusted EBITDA. And there it is, $801 million. That is the crucial number. Once you clear away all the fog, you see that Coinbase's core business actually generated a record amount of earnings. This proves the incredible operational strength the company has, especially when the market starts to pick up. So, what do you do when your core business is a cash-generating machine like that? Well, you use that cash to fund a major transformation, and that's exactly what Coinbase is doing, pivoting aggressively to become an everything exchange. The crown jewel of this whole strategy is their $2.9 billion acquisition of Deribit. And let's be crystal clear, Deribit isn't just another player in crypto options. With an 85% market share, they basically are the market. This one move instantly makes Coinbase a dominant force in global derivatives. And this chart just shows you the sheer scale of what they're doing. It has completely re-engineered their balance sheet. Goodwill and intangible assets, which represent things like brand power and market position, have just exploded, from about $1 billion to over $5.4 billion. This shows they're not just buying assets, they're buying market leadership. Now, an ambitious plan like this isn't happening in a vacuum. Coinbase is making this big move at a time when they have two powerful tailwinds pushing them forward, a big shift in the economy and a huge breakthrough on the regulatory front. First up, the macro environment. The Federal Reserve has finally started cutting interest rates. And as we know, lower rates historically act like rocket fuel for risk assets like crypto. It makes holding them much more attractive, which drives activity on their platform. But this next one is even more significant. We are finally seeing a new dawn for regulation. A joint statement from the SEC and the CFTC is providing the clarity this industry has been begging for. For a company like Coinbase, which has always put compliance first, this is an absolute game changer. It widens their competitive moat overnight. And we didn't have to wait long to see that moat in action. During that crazy flash crash in October, when the market went haywire, Coinbase's infrastructure held up perfectly. While their rivals were freezing and failing, Coinbase proved that their systems are institutional grade and reliable, even under the most extreme stress. You can really see why their diversified strategy is superior when you look at the competition. Coinbase and Robinhood, who both offer a wide variety of assets, absolutely crushed it in the Q3 rally. But then look at Block. Their Bitcoin-only approach meant their revenue actually went down during that same period.
And the reason is pretty simple, right? The Q3 rebound wasn't just a Bitcoin story. It was driven by a broad rally across Ethereum and tons of other altcoins. This just powerfully validates Coinbase's everything exchange strategy. It proves that to win, you have to be able to capture growth from the entire crypto ecosystem.
So let's pull all these pieces together. Let's form a clear thesis on what this all means, but also stay disciplined and look at the key risks we need to keep an eye on.
So our core thesis is this. The market is getting confused by the financial noise we talked about at the beginning. It's looking at those conflicting headline numbers, and as a result, it's missing two critical things. First, the incredibly profitable core business underneath it all, and second, the successful pivot into a regulated, diversified financial powerhouse.
But of course, no investment is without risk. To keep a balanced view, we're tracking four main things. They need to prove that this amazing EBITDA consistently turns into real free cash flow. That huge amount of goodwill on their books could be a risk in a bear market. Fee pressure from competitors is never going away, and at the end of the day, their business is still very much tied to the broader crypto market cycles.
And that really brings us to our final thought. As this fog of regulatory uncertainty finally starts to lift in the US, is Coinbase, with its compliance-first DNA and its powerful new product lineup, actually building a position for itself in American digital finance that is, well, basically insurmountable? That's the big question.